Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified. So what are we talking about? Well, I have a lot of methodology and action to cover this week, and that's a good thing because we haven't had any action in a while. And now that we're getting some action, we're getting some IPTs hit, initial profit targets hit, trailing those stops, and all other good stuff. I think it's very important that I talk about these things because we've been sitting on our darn hands for so damn long. So we're going to talk about the methodology in action quite a bit. I want to talk about free rolling. We've got 2 or 3 of these that set up as free rolls recently, and that'll make sense in just 1 second. I have a chart that I showed that wasn't a mystery chart. I have a little follow-up on that one. And then I have a new mystery chart for this week. And you might be able to figure out what that is. And maybe I'll give you a hint in a minute. Now, I am going to continue with the series I've been doing on Jesse Livermore. However, there's not going to be as much time this week. And also, I'm on Chapter 10 in Reminiscence. And Chapter 10, I think it's something, as I started putting my slides together, I realized that it's something that shouldn't be taken lightly. So I'm going to come back to that one, that chapter that is, next week. Housekeeping, I do take requests. It makes my job a lot easier. I know what I'm going to cover ahead of time. Feel free to shoot me an email. You can reach me at davelandry.com/contact. If you want the slides from all the webinars combined, all the Trading Simplified webinars, you can go to davelandry.com/StockCharts. I'll also give you a free market timing course, which is going to discuss a system I'm talking about in just a few minutes, give you the rules on that, and a bunch of other good stuff. Enough stuff to keep you busy for a long time. Get to know me first before you invest in any products or services. Anyway, I also do a webinar every Thursday night. These are still live, or they've always been live, and you can sign up at davelandry.com/webinar most Thursdays. Twitter at tfollowingmoron, and YouTube at Dave Landry. That's how to get in touch with me. Okay, we have a mystery chart reveal this week, and that chart is QBTS. You can see the entry, the protective stop, and the IPT. Let's take a look at this. Nice thrust higher. Last week I was talking about this one. It made a big cup and handle at low levels, and that's one of my favorite things when these stocks just kind of go out and go down, I should say, and bottom out forever, then have a big rally off of lows. This was also, he tried to say, a Landry light pullback. So you can see it pull back to the moving average. Notice the Landry light, meaning lows are greater than the moving average, and that's illustrated down here in the green. Very simple pattern to scan for. As you can see, it goes back to 0 when it intersects the moving average. This obviously isn't the only pullback pattern I trade, but a few years back when I was working on the Layman's Guide to Trading Stocks, I guess that was 10 years ago, and I'll give you a copy of that if you put your information in the aforementioned link. Anyway, long story endless, I was looking for some things that people could use to kind of not so much mechanize their trading, but have something to maybe quantify it to an extent where you can scan for it and make it easy to recognize. Now, you still need to look at the chart, and you still need to look for a lot of things like acceleration, and in this case, coming off a big, fat, low-level base, cup and handle, and bigger picture patterns like that, etc. But it does give you a good start if you're looking to scan for stocks. Now, I just simply look at a couple thousand stocks every day, almost all of my tradable universe, and that's done through very, very rudimentary scans. Anyway, you can see it did pull back from the moving average. It did trigger an entry. The entry is right here. The protective stop is down here, and the IPT is up here. The ultimate goal, obviously, is to get that initial profit target out of the trade, and at that point, the stop is brought to break even, and then we trade or trail loosely on the remainder to hopefully be with the stock for a long, long time. So that's QBTS, one of those quantum computing things. And I guess that's kind of like the picks and shovels for the artificial intelligence. You have to run that artificial intelligence on something, right? All right, let's talk about free rolling, and that is the secret to trading success. As I've said quite a bit, the real money is in longer term trends, but it's way too risky, and you give up way too much open profits. Also, your accuracy is abysmal, and I kind of hate to pick on the turtles because they did so well over the period of time, but they were sorted in the right place at the right time, and Dennis discovered through one of the turtles that their risk were crazy off, and they could have easily blown up had the conditions not been phenomenal. But anyway, the point I'm trying to make there is that longer term trading is risky. However, if you could take a hybrid approach to trading and look for that swing trade, whether it's crypto, stocks, or whatever the market you're interested in, and then trail the stop higher, and then hopefully be with the stock for a long time. That's where the money is. So let's talk about this SYM. I believe this was a former mystery chart. By the way, all the mystery charts come straight from my trading service, so far at least, or at least most of them, straight from there. And I'll show you how they get the archives in just one second. Nice little uptrend here, followed by a pullback. And once again, if we take a look at the Landry light, you can see we had many days of Landry light, about 30 or so. And then when it pulls back to the moving average, it goes back to 0. So really simple pattern to recognize. Also, as I said in prior weeks, this market had been trending higher, and then it began to accelerate higher. And then it also had nice persistency in more recent times. This trend's a lot bigger than it looks like. If you were to back the chart way back to right here, it would look much more impressive, just for what it's worth. Anyway, gradual trend, like I was saying, accelerated trend, and also a more persistent trend in more recent times. So entry was here, stop was here, initial profit target was here. Now, we will trail before the initial profit target is hit, as I say quite often. However, if it's hit intraday, we will instantly bring up the stop to break even. So if you get stopped out, at least you were able to get a decent profit off. And on the hypothetical 100K model, which I also model myself with actual trades, that would be $2,000 profit, and you take off $1,000. And I'll show you that real quick. But those are the trades that I made to mimic the service, so to speak. The recommendation was for a little bit less than 400 shares. I just rolled it up to 400. And at this point, again, you're up $2,000 on a 100K account. And then at that point, you want to bank half of it. So you sell half of your shares, which gives you $1,000 cash, which is better than the poke in the eye. And then this one eventually did stop out. So let me show you the trailing stop on this one. So you would trail it higher, and there's two things I do when I'm trailing a stop. If it makes a big move higher, I will trail it higher, but at a slightly slower rate. Let's say it goes up like 5 points in one day. I might only bring that stop up 3 points, thereby opening it up for 2 points. Open that protective stop, that trailing stop up 2 points on the remainder. And that's a secret, adjusting to the longer term volatility and riding out those longer term trends. Now, it does suck in the end, giving up all this open profit, but it is what it is, and then your share size is smaller, and you also got into this thing at a much, much lower level. So this is pretty much a double at this point, or nearly a double, I should say, up around these highs. And you get stopped out for a 50% gain, which is better than the poke in the eye. And I'm always guilty of playing the annualization game, but if you were to annualize that, it would be pretty impressive. So stopped out for a $2,500 gain, plus you banked $1,000 already. So that gives you $3,500 in a trade. Now, this is based on 100K. So in 100K, you're looking at a 3.5% gain over a very short period of time. So that's huge. Now, I would much rather if this thing just kept on keeping on and went up several 100%. And every now and then we do catch one that does that. But I'm happy with this one, and I'm ready to shout next and go out and find something new. And when this happens, after we've been trailing the stop for a while, I just say so long and thanks for all the fish. You have to be careful with the mentally monetizing of profits, and I'll touch upon that in just 1 second. So there are my trades down there. I've got this little S&G type of $1 I spent on an option. That was just an experiment I was doing, so ignore that. But you can see I got in 400 shares, and I didn't quite do exactly with the service. I gave it a little bit of discretion. I ended up getting stopped out a little bit early on that. But overall, I did okay. And if you add it all up, I forget exactly what it is, but it's pretty close. It's almost right in line with the service. Okay, this was not a mystery chart. This was one we talked about a while back, BTBT. And you can see it's in a nice trend. It didn't quite pull back all the way to the 30 EMA, but remember, I do trade trend knockout patterns, which I call a TKO. This is kind of a bit of a TKO. It's also a pullback, and you can see it almost made it to the 30 EMA. Now, earlier I said the great thing about Landry-like pullbacks is they're easy to scan for, but again, I will look at a lot of charts, and the reason I look at a lot of charts is I don't want to miss a stock that looks like this, that's almost something like a Landry-like pullback, but also fits other patterns. Anyway, entry was there, stop was down there, initial profit target was here. So far so good on that one, so we're in free roll mode on that one. Now, we have a new mystery chart for this week. Notice that the stock had been trending really nicely, nice deep pullback, which is good when you have a sharp uptrend like this. This means a lot of people have gotten knocked out. The other thing that's good about a deep pullback when you're in a sharp trend is if you use a fairly liberal entry, the chances of you getting triggered are possible, but if the market decides to keep on imploding, you won't get triggered on noise alone if it just bounces up a little bit and then dies, and then no capital gets put into harm's way. And I'll show you an example of what I'm talking about there in 1 second. But you can see, once again, another Landry-like pullback to the 30 EMA, and unless it triggers, there's nothing to do in this particular situation. So entry is there, stop is down here, and the IPT is up here. That's a good looking setup, if I say so myself. All right, now let me show you something that really hasn't worked out yet, but I want to explain to you why I'm not going to give up on it. Okay, it was Riots, recommended back on 4/20/23. And again, it was in a really nice uptrend, and there's that pattern again, Landry light pullback. Notice the nice Landry light, meaning lows are above the 30 EMA, and that's illustrated down below. As you can see, 30 or around 30 or so days of this nice Landry light. You want about 20 days or so of this Landry light for this pattern, and then you want to see it pull back to the moving average. But again, it doesn't always have to pull back all the way to the moving average. Now, the entry was here, the stop was down here, and the IPT is up here. Now, this thing just kind of died in here, unfortunately. Now, what do? Nothing, because I'm following the plan. And that's another one of those little simple secrets to trading, is you follow your plan. You come up with a plan and you follow it. Now, in this case, I hear you if you're thinking, Dave, what about a time stop? And this thing's not moving. It's dead money. It's like, okay, that's fine. But what's going to happen if this thing begins to take off without you? How are you going to handle that? For me, it's easier just to follow the methodology. And it's especially easy for me if it's something that I actually recommended and I actually tell people this is where our stop is, this is where our IPT is, and of course the entry. So it's easier for me to follow along if it's something I recommended. In my own trading, I'm not always as good as you might see with these model trades. So I'm guilty as charged, and we might get into that in a few minutes. Anyway, so far okay. We're actually still negative on this one, but I don't see it as dead money. I don't have a problem with this. Years ago, maybe I used to, but I did learn patience, and I did learn that just let the stop take you out of a market. Maybe it's just resting before it takes off again. And I did have, throughout my career, 1 or 2 stocks that actually got bought out after going sideways for some time. Now, I'm not insinuating that this stock might get bought out, but it might take off, especially if crypto keeps doing what it has been doing lately. This is a crypto-related stock, obviously. Now, if you want to see these archives to these stocks that I'm mentioning, and you can find probably nearly all the mystery charts down here too, and you can see them without any hindsight whatsoever. You can click on the video and watch what I was thinking about at that particular point in time. And this is 100% free, the archives at least. You have to pay to see them live, but if you want to see the archives, this is a great exercise, if I say so myself. Go through these archives, and then you'll be able to see what happens, warts and all. All right, let's talk a little bit about following a system. The reason I want to do this is it's hard to follow a system, and you need to follow a system through good times and bad times. Now, my own trading as far as stocks is concerned, even though we're looking for Landry-like pullbacks and TKOs and those type of things, we're not taking every setup we find. We're picking the best of the best. But I did want to create a simple system for the overall market. I did this, I forget how many years ago, but maybe at least 5 or so. And I thought it would be fun. I know you want to pardon me, but I thought it'd be fun to kind of follow along with something like this. And then I did some research recently, and I found out that it seems to work pretty good in the Qs. This was originally developed for the S&P 500. The system is pretty simple. When the market closes below the 50-week moving average and more than 10% away from its 50-week closing high, that's the entire system, for sells, you want to sell. And the designer's intent was not so much to get you long, but to get you out of the way. And you could see that the market imploded like 30%. Somebody on YouTube said, well, what about that pandemic signal? That was worthless. And it's like, well, I don't know. The market dropped about 30-something% after it triggered a sell. So I think that's worth it, especially if you could sleep at night. And I know a good friend, and actually more than a good friend, some relatives too, but one guy, a good friend of mine, was visiting, and he wasn't sleeping at night, believe me, when he was down 30 or 40% on his investments by just buy and hold. Anyway, the reason I want to show you this is just you have to find something simple and trade it and get used to trading it. Now, this is just a very small part of what I do, but it does help me to time the market. It does help me to get on the right side of the market. Now, the buy signals are a little bit more stringent. You need 2 weeks of Landry light, meaning you need 2 lows above the 50-week moving average. In this case, we're going to use a simple moving average. And it also has to close within 10% of the 50-week closing high. So the buy signal was right in here. And as I showed a few weeks ago, I got in at 319.49 just to show following a system type of trade, about 100 shares. And when I took the snapshot a little while ago, the market was at 362.21. So we take away 319.49. So that's 43.72 in profits times 100. And that's 43.72. Now, one thing I did want to show you with following the system, because I remember yesterday or day before when we were down 3 or 4 points, I'm like, good Lord, that's $300 or $400 just evaporate out of thin air. And you can see right here, I did the math on it. That's actually $1,400 slide from high to low, but about 600 of that has already come back. So you're going to have some drawdowns along the way, and you're going to have a lot of open profit drawdowns once you get into a decent trend. You have to learn how to live with those open profit drawdowns. Now, again, when I'm trading individual stocks, I will take off half my shares, so there's fewer shares that are being traded, and that makes it a little bit easier to stomach. All right, let's hop into Mind to Trade. As I've been saying quite a bit, we've been focusing on Reminiscence of a Stock Operator for the wisdom of Jesse Livermore. And I'm also pulling from the biography a little bit, and then we're going to wrap things up eventually with how to trade in stocks. But it seems like each week as I do this, there's so much wisdom from Mr. Livermore that it's going to take us a while to finish up. But right now, this is the 9th episode, and we've made it all the way to chapter 10. And we're not going to finish off chapter 10. I can tell you that, there's a lot there. When we last left off, Livermore became enlightened. He broke the market, and he really could have crushed it. And they were actually asking him to please stop shorting stocks. And he liked the way conditions were looking, and he actually started buying. Well, I was worth over $1 million after the close of business that day, but my biggest winnings were not in dollars, but in the intangibles. I had learned what a man must do in order to make big money. I was permanently out of the gambler class. I had at least learned to trade intelligently in a big way. It was a day of days for me. So he had made $1 million, I think, in one day, and that wasn't his enlightenment. I'll tell you this, though, when I'm doing well in the markets, I seem like I'm enlightened and feel enlightened. But the bottom line is he began to not try to go after every zig and zag. He began to go for the more of the big pull. And that's why I love showing you stuff like the TFM 10% system like I just did. And then some of these stocks that we get in and stay in for weeks, months, and sometimes years. Because that's really where the real money is. He also learned that if you're wrong, you have to get out. Now, you can't just jump in and out like I just said. But you have to have some sort of place where you realize that you are wrong. One thing that he does a lot of, I don't fully agree with, is that he does pyramid a lot. And I do like his premise, and he won't add to a position unless it's at higher and higher prices. That way you're not averaging down, which is a recipe for disaster. So he learned a lot of these different things, and he's becoming enlightened from it. One of the most famous things that Livermore ever said was, a stock speculator sometimes makes mistakes and knows that he is making them. Backing that up just 1 second, when you make a mistake, Livermore says it wounds you in 2 tender spots, your pocketbook and your vanity. I often write about the fact that it's mentally and monetarily. And you have to get past that mistake. Unfortunately, there's plenty of other mistakes that you can make. But the most important thing he's saying here is that a stock speculator sometimes makes mistakes and knows that he is making them. Whenever I work one-on-one with an individual, I'm always thinking like, how am I going to fix this guy or gal? And I'm going to figure out what the heck they're doing wrong. And one day, I just came up with this huge epiphany. I know, it's wow, it's like, just ask them what they're doing wrong. And to my surprise, so far, everybody has told me, well, I'm not honoring my stops. I'm trading too big. I'm trading in mediocre setups. It's kind of like, don't do that, drop the mic. My job is over. My favorite story that I've told 1,000 times is I had one client, and conditions weren't fantastic, so I'm not bragging, but I thought we were barely above the water, making a little bit of money with the trading service, but not printing money. Anyway, he calls me up and he was very angry and he says, I can't make any money with this, and because you're gonna have to look at my trades. And I'm like, I don't really do that thing. And he insisted that I did. So I took all his trades and I pulled them all out, all the ones that were relative to the service, that is, and I put them in a spreadsheet and I added them all up, and he was actually profitable over the period. And he did an amazing job of following the trading service, probably as good or maybe even better than me. It's like his prices were just phenomenal as far as getting in and getting out and taking partial profits and all. And I did notice that he had made 20-something day trades, I think it was in Continental Air, which no longer exists. And he had about a $5,000 loss there. So I called him up and I said, look, I got good news. You did an amazing job of following the system. You took every recommendation that I put out, and you followed the plan to a T. And you know what? You actually made money off of that. Not a lot of money over the period of time, but you did okay. However, these 20-something day trades that you made, you lost over $5,000 on those. And before I could finish explaining, he says, I know. So it's like he knew already. So a stock speculator does sometimes make mistakes and knows that he is making them. And believe me, I am not holier than thou. I do a lot of stupid stuff, and sometimes I know what I'm doing when I'm doing it. Of course, if a man is both wise and lucky, he will not make the same mistake twice, but he will make any one of their 10,000 cousins of the original. I think I've written about this before. There must be 50 ways to lose your money. And then I saw somebody else had written the same thing, or something very similar. There's a lot of, it's like you don't know what you don't know. A lot of times when it comes to the markets, you will make newer mistakes and mistakes you never thought about. However, what you need to do is you need to document when you are making those mistakes. And like Livermore said, do not make those same mistakes twice. And for me, my morning pages have really been a godsend. I wake up every day really early, before 5 o'clock, and I write 3 handwritten pages. That's the first thing I do before I do anything else for the day. And believe me, a lot of times I feel like Einstein's definition of insanity when I keep trying to trade a certain way and it's just not working. So you're going to learn a lot about yourself and a lot about your mistakes, not to go off too far on a tangent, from doing those morning pages. And I would strongly urge you to do that. Now, when it comes to losses, Livermore talked about how good he was about getting out of the markets at a loss. A loss never bothers me after I take it. I forget it overnight. But being wrong, not taking the loss, that is what does the damage to the pocketbook and the soul. Now, he was talking about someone who was trading at a size that they couldn't sleep at night. And it was interesting that he mentioned Dixon G. Watts. And I was like, well, that sounds familiar. I think I have his book. I'll show you that in just one second. You remember Dixon G. Watts' story about the man who was so nervous that a friend asked him what was the matter? Sell down to the sleeping point, answered the friend. Well, he explained that he was long a whole bunch of wheat, and he was very nervous about his position. Might have been cotton, but you get the idea. So he told him to sell down to the sleeping point. And Livermore went on to say that you should trade at a size that makes sense to you. Now, in my case, I recommend 2% if stopped out, and do not go above that. And if you're newer to trading, maybe 0.25% of your portfolio if stopped out. Anyway, Dixon Watts wrote a book, Speculation as a Fine Art and Thoughts on Life. And this is a really good little book. It's a quick read. It's a one-sitter. It's only maybe 50 pages, double-spaced mostly. And he's got a lot of little thoughts on life. And it's a great little book. It's not going to teach you how to trade, but a lot of the stuff, especially after you've been trading for a while, will make more sense. But the one thing that really struck me from this is, in his secret heart, every man thinks the universe is especially hard on him. How bad is it when you're losing money trading, or just as bad where you're waiting and waiting and waiting for the next trade to come along. You feel like there's something wrong with you. And I think this really struck a chord with me for Mr. Watts. It said, in his secret heart, every man thinks the universe is especially hard on him. And it seems like the market is out to get you. The market is not out to get you. As I've said time and time again, you don't see the market as they are, you see the market as you are. If you're bullish and stocks are going up, then everything is fine. But if you're bullish and stocks are going down, then you might not see that fact that the stocks have rolled over. Now, Livermore spent some time talking about stocks versus commodities. A man can approach it, it's commodities, as he might any mercantile problem. It may be possible to use fictitious arguments for or against a certain trend in a commodity market, but success will be only temporary, for in the end, the facts are bound to prevail, so that a trader gets dividends on study and observation as he does in a regular business. He can watch and weigh conditions, and he knows as much about it as anyone else. He need not guard against inside clicks. Dividends are not unexpectedly passed or increased overnight in the cotton market or in wheat or corn. In the long run, commodity prices are governed by one law, the economic law of demand and supply. So basically, he was saying if you can figure out supply and demand, you can figure out commodities. Well, that's easier said than done. But my takeaway from this in more current times is treat stocks like commodities, because a stock is a commodity. And as a pure technician, I'm just looking at price. And if you boil it all down and take the most basic of all economic graphs, you're just looking at supply and demand. Now, here's a stock. I used an example in last week at charts, and we triggered in, and we did okay on this one, made a little bit of a profit, and then we stopped out on the remainder. But overall, we did okay, like $1,500, nothing to write home about. However, if you would have stuck with the stock, as you could see, and as of last week, you would have ended up losing $4,339 had you not taken profits and then stopped out on the remainder. Now, the reason I'm showing this stock is just popped in my head as a supply and a demand situation. So obviously back here, there's demand, a little bit of a almost textbook TKO right here, trend knockout pattern. And then what happens? The stock begins to roll over, stops you out, and then obviously there's plenty of supply. So I think if you just have one takeaway this week, it's think in terms of supply and demand. Uptrend is demand, downtrend is supply. Well, that's all my time this week. I want to thank everybody for watching. If you need, again, follow-up information, there's everything you need to know. So thanks again for watching, and may the trend be with you.